Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope all of you had a very beautiful day of trading. And in today's markets, guys, well, the S&P 500 hit a brand new all-time high. The bulls are definitely in full control of the markets, and the sentiment around the market is mostly positive right now. We had some very beautiful rotation, guys. Every single major sector, for the most part, was green on the day, reiterating that bullish sentiment across the board. However, is this the time to go all in at the all-time highs? Is it the time to YOLO some call options, or is it maybe some time to raise some cash, play a bit more defensively, write some covered calls, or just sell everything right now because there's an impending recession on the horizon? Well, I'll be giving my thoughts later on in today's video. So in today's video, guys, we're going to cover a few things together, of course. Number one will be my thoughts on everything I just discussed. Buy, sell, or wait. Number two, I have a very interesting earnings report prepared for you guys, and that is going to be for Pepsi. Pepsi coming in with their earnings yesterday before the open, but we'll take a look at them today and see what happened in that earnings release. Gives us a great insight, guys, into the health of the consumer right now. Thereafter, guys, we're going to go through our major technical analysis rundown of our major stock market indexes, followed by our major big tech names, and see if there's any opportunities that are worth our money to be deployed in a lot of our big tech names. So without further ado, guys, a lot to cover in today's video. Let's jump right into the action. SPY up a healthy 0.69%, QQQ up a very healthy 0.79%, and across the board, you can see there was some fairly decent rotation when we go to the heat map, right? Not much getting left behind at all. Tesla pulling back a little bit. They have their robo-taxi event tomorrow, so possibly a little bit of apprehension there. Google, once again, getting hit with the exact same Department of Justice headlines today. No new news, just another reiteration that Google is being sued or due to their monopoly status on search and advertising, which led the company to at one point be down over 2.5% today. But that was pretty much the only piece of red that you had in big tech. Meta, ever so slight pullback, but they deserve it. They've been on a heck of a tear. Everything else pretty much, guys, in the green. Semiconductors mostly green except for NVIDIA. The bottom half of the market, financials performing very, very well leading into the earnings cycle starting on Friday for the banks. Healthcare also performing very nicely. Let me just move my big head over so you can see. And the bottom half of the market, guys, also performing very well after being slightly muted in the past couple days of trade. Suffice to say, industrials are on their way back, but still some sluggishness in real estate and utilities. And once again, that's another byproduct, guys, of these yields continuing their march higher over the last 2 weeks. It impacts real estate and utilities the most, guys, because those are the ones that stand to grow the least and that pay the most in terms of dividends. So it stands to argue when you can get a risk-free yield 20-year bond for 4.5%, well, why would you buy a dividend-paying company if there's risks to that business, right? Same thing we've been talking about for the last 6 months. So those two sectors were kind of out of favor right now. Now, before we get into Pepsi's earnings, guys, is it a good time to buy these markets at the all-time highs? Or should we be a little bit more cautious? Well, you guys know my positioning, right? I've been cautiously optimistic on the data or cautiously optimistic on the markets. And I, similar to the Federal Reserve, am data dependent right now. Although we know there's consumer discretionary spending concerns, we've known that for 6 to 9 months at this point. Inflation is now under control and the rate cut cycle is now started. Although there's a few red flags, although there's a few cracks in the economy is slowing down ever so slightly. The employment, although we've been getting good jobs numbers as of lately, we'd be lying if we would say that it's as good as it was back in 2021 and 2022, right? So employment is on a slight downtick right now. Economic output as well is on a slight downtrend too. So there are some cracks right now, and we have to acknowledge that as traders and investors. So let's explore the bear case, guys, because the bears do have a decent case on the horizon, right? So let's have a look at exactly some of the catalysts that we could be expecting. Well, number one, guys, coming into the month of October, of course, you have your election uncertainty. That's been the case, guys, going back 40, 50 years. Every single time in the month of October, usually the markets embark on somewhat of a dip through the election uncertainty. Couple that with the fact that October is already not a very good year for seasonality. And I'll pull that up real quick so you can see right here. Here is your expected seasonality. As you can see, September is supposed to be red, but it was actually green this time around. So that was kind of an anomaly. Obviously, these probabilities are not 100%. It's not every single September that is red, but for the most part, as you can see, 1928 till now, the average is red, right? October, same thing. Not every single October is red, but on average, they are red. And this one is illustrating a year 4 of a presidential cycle, so the actual election year. And as you can see, the trend remains the same. pretty red for the month of October on average, right? And then November and December, once again, on average, are supposed to be very bullish months, not only in an election year, but in any year in the S&P as a whole. So hopefully that provides a little bit of insight into that as well. So these two factors just having to do with the seasonality of the market, right? Just some technical levels to look out for. Number three, and this is a big one, guys, geopolitical conflicts. We've seen the impacts that these have had over the last 2-3 months on the market as the Israel versus Iran tensions kind of escalate, right? Obviously, there's Palestine in the mix, there's Yemen in the mix, and a host of other issues in the Middle East as well. We also still have the ongoing conflict between Russia and Ukraine. And if ever tensions escalate in either one of these conflicts, guys, the markets obviously do not like it. They do not like uncertainty. So this one is a big one, and we'll keep our eyes peeled for further developments, but definitely another one to add to the list of bearish catalysts. Then we come into a relatively big one as well. The infamous Q3 earnings, which are coming up now over the next few weeks, the corporate slowdown in terms of profit margins and possibility of some layoffs. Both of these two things the market will not like. Layoffs will not be well received by the markets just due to the impact on the economy and possibly pushing the Federal Reserve to have to cut interest rates faster. And obviously the corporate slowdowns in terms of margins being compressed and revenue being compressed as well. Well, it's very tough for the market to continue marching on in a bullish fashion when valuations are very high right now. It's hard to support those high valuations when you have diminishing margins, diminishing revenues as a byproduct of an economic slowdown. So this is a very, very big one, guys. And you know me, I'll be here all throughout the earnings season to give my thoughts on the matter. As of right now, we don't have too many earnings out, but we're going to take a look at what Pepsi just said, and that should give us maybe a little bit of an indication as to what we're heading into. I am expecting these to be a little bit weak, but it's just a question of how weak will they actually be? A lot of these companies have already guided for a weak Q3 earnings cycle. Are they going to get completely decimated and come in below those already low expectations? Or maybe have they set the bar too low and now they're going to beat them? So we're going to have a look at all that together, guys. And then number 5, of course, the bad Q4 data. Now that's after October coming into November and December. In the month of November and December, if we start getting bad jobs report, bad GDP numbers, stuff like that, bad manufacturing output, bad services output, we'll expect the market not to like that either. That will be another check in the bearish catalyst camp. So we're going to keep an eye on that, guys, in terms of the erosion of the economy, the erosion of the jobs market. But as of right now, things are still relatively stable as they can possibly be after we've been at 5% interest rates for a year and a half. We're expecting this slowdown. That's a byproduct of high interest rates. We're expecting the consumer to get squeezed. We're expecting corporations to get squeezed. But have they been squeezed too much? And are we on the brink of collapse? That's what we're looking out for. So far, no data to indicate that we're really off the edge of the cliff just yet, but we'll always keep our eyes peeled, guys. You know me, I'm very transparent and I'm very open to either or scenario and adapting as the market conditions change. And then the big one, is the Fed too late to the rate cut cycle? If all of these deteriorate in a very fast manner over the next 2 months, we may have to see some emergency rate cuts by the Federal Reserve. And if that happens, that's the worst case scenario, guys. Expect the markets to really start coming down hard before eventually finding a bottom. And then you guys know the drill, right? Usually when the Fed panics, that is when you get your market bottom. So all of these things, the bears do have an argument, guys, and we have to understand every single one of these points and how they play into the current markets. So as of right now, guys, I'm still about 65% bullish on these markets, but 35% bearish as well, right? They do have a very big case, guys, and a recession is no joke. Even though most analysts are not expecting a recession, if it does happen, we need to be prepared so that we're not blindsided by the data, right? So always keep an open eye and an open ear to the other side of the narrative. You may be bullish right now, but you have to understand what is the other side of the thesis. When does your bullish thesis get invalidated? And most bullish theses will be invalidated when all of these points come into synergy together, most likely at the end of October into early November, right? So keep your eyes peeled for those, guys. Those are going to be the big ones. So with that out of the way now, let's take a look at Pepsi's earnings. So let's have a look. Pepsi came out with their earnings yesterday in the pre-market. And as we can see right here, Pepsi's actually benefited from a substantial rally after their earnings, about 3.5% to the upside. But the numbers weren't all that good. Here you can see they did beat on EPS, but what they don't show you is they missed on revenue. Curious to know why TradingView didn't include the revenue number here. But they beat on bottom line margins, and I'll take you into the revenue, and you will see, guys, they had a slight miss, and the overall earnings report wasn't the best. But the thing is that Pepsi has been talking about this at this point for the past 9 months. It's nothing new. They've been guiding for this slowdown, and now they are slowing down as expected, right? So these are kind of baked into the share price right now, kind of priced in, which is also one of the reasons that Pepsi has been largely flat, guys, largely flat since October of 2023. We've literally just been stuck here because things are not getting necessarily better for the company, but they're not getting exponentially worse either. So let's have a look. PepsiCo trims revenue outlook as North American snacking, key international markets lag. So let's have a look right here. Pepsi on Tuesday lowered its full year outlook for organic revenue after its second straight quarter of weaker than expected sales. The repercussions of the Quaker Foods North America recalls, weakening demand in the US, and business disruptions in some international markets, the Middle East, weighed on the company's performance in the quarter. For 2024, Pepsi now expects a low single-digit rise in organic revenue, down from its prior outlook of 4% growth. So low single digits, guys, they mean 1 to 2.5%, down from the expected of 4%, which is the company's historical average over the past couple of years. Now, the company reiterated its forecast for an increase of at least 8% for its core constant currency earnings per share. So revenue guidance down, but reiterating their EPS, which means that if you have lowering revenue, but your profit margins are staying the same, it means you're trimming some fat in between, right? So they're doing a great job at cost control. Pepsi is a veteran in the game, guys. They've been doing this business since the 1970s. They know how to navigate through economic slowdowns, and they've been in far worse periods than right now. So they're very good at cost control, promotions, and stuff like that, just as Coca-Cola is too. Very seasoned veterans in the game. So I wouldn't expect Pepsi to be blindsided by what's happening right now. Here's the revenue miss, 23.32 versus the 23.76 expected. So as you can see, clear miss by about 2% on the revenue from the guidance. Decent miss by Pepsi, guys. Have to call it as we see it, right? Net sales fell 0.6%. Organic revenue, which strips out net acquisitions, divestitures, and currency changes, rose 1.3%. Bit of a oxymoron, right? How do net sales fall, but organic revenue climbs? Well, Pepsi still has a little bit of pricing power. They've increased prices, right? So even though your sales volume is down, your actual revenue is up, the prices kind of compensate for this loss in net sales. Demand for Pepsi snacks and drinks dropped this quarter. The company reported that volume for both its food and beverage divisions declined 2%. Last quarter, executives said shoppers across all income levels are changing their behavior. And we've been hearing this now, guys, for the past 6 months. So nobody should be surprised about consumers changing their spending patterns right now. Weak demand in North America weighed on Pepsi's overall volume. Shoppers in the US have grown more cautious, snacking less and making fewer purchases at convenience stores. They've all been saying this, guys. Pepsi, Coca-Cola, Target, Walmart, Costco, every single one of them. People are a lot more picky on what they're spending their money on right now, with good reason, right? People are cautious in the face of a potential recession and potentially, maybe in the face of the risk of losing their jobs. Now, Frito-Lay North America, because Pepsi doesn't only do beverages, they do a lot of snacks as well, reported a 1.5% decline in volume. The company has been trying to offer more value to customers and improve in-store availability with its snacks. While the division's volume is improving sequentially, meaning quarter over quarter, right? It was a lot worse 2 quarters ago. The broader category has slowed down compared with historical performance. After outperforming packaged food categories in previous years, salty and savory snacks have underperformed year to date, said the Pepsi executives. Now, moving on further, volume for Pepsi's North American beverage business also fell 3%. Brands like Gatorade and Pepsi saw revenue growth in the quarter, but the energy drink category, including Pepsi's Rockstar, has seen demand weaken as traffic to convenience stores falls. I think it's part of the economic cycle that we're in, and that will reverse itself in the future once consumers feel better. Kind of logical, right? The Latin America and Africa, Middle East, and South Asia markets also reported shrinking volume for both food and drinks. So Pepsi not doing the best, guys. As we've said prior, right? Consumer discretionary spending slowdown is a very real thing. And just to address some of those international concerns for Pepsi, right? One of these analysts right here, I have the earnings call right here. Here's what he asked. Looking at the two pieces of the international business, seems like the deceleration has been more in the convenience food side versus the beverage business. So he wants to know essentially, what are the drivers in international of the slowdown in snacks and convenience food? Are they similar to the US or are there other drivers? So here's what the CEO had to say. So he says, there are pockets of strength international. There are markets like Southeast Asia, India. Those markets are growing nicely. We see parts of Eastern Europe growing nicely as well. Brazil growing at a good pace. So there is pockets of growth. There's other markets where we're seeing a bit of deceleration. China is a market where consumers are feeling a bit more constrained, and we're seeing that in our food business. Although we're gaining market share, we're seeing a deceleration from double-digit to single-digit growth. We're also seeing a bit of a deceleration in Mexico. They think it has to be related with some elections. Now, we're seeing parts of Western Europe also challenged. Weather and other dynamics there, but also consumer discretionary spending slowdown in Western Europe. Think the UK, France, Germany, places like that, right? Now, the Middle East is a different reality. The fact is that we have a very big business in the Middle East. And yes, it's been impacted by geopolitical situation. And I don't think that's going to change in the coming months. And then they go on to say the teams are doing a great job at, navigating the situation as best as they can. So there's the international mix for Pepsi. Some markets doing well, some not doing so well. Conflicts in the Middle East impacting the business, of course. So as we saw, guys, very mixed. I would tend to say that this one is more negative than not. But the reason the stock is up, guys, is because it's not deteriorating at an accelerating pace. Pepsi has already guided for the fact that this year was going to be slow for them, but they expect better things in 2025 when the rate cuts come into full effect and consumers feel that they have more purchasing power, right? So the stock price right now, where do we stand in terms of valuation, guys? Pepsi is a very strong company, guys, right? Back to very high free cash flow. They have the brand power. They're doing good cross control. Discretionary spending is lower, of course. So that is a secular headwind for the company, right? Revenue growing 4% per year, EPS growing 10% per year over the next 3 years. This is annualized. So that gives us a forward PE at 172 bucks of 21. A little bit high in hindsight, or in forward sight rather. 2024 forward PEG ratio at 172 is 2.11, but it's not the best. You guys know when EPS is 10 or below, especially for a company like Pepsi, a more value company that pays a 3% dividend right now, the PEG ratio is not the best. Usually you use this for growth companies, right? We would tend to use the free cash flow yield, and right now it's oscillating between 2.9 and 3%, which is okay for the company. If you take a look right here, guys, in terms of the financials, not really a problem in terms of financials. Yes, they have a lot of debt, but it's just the business model they run. Coca-Cola is largely the same. A lot of free cash flow that they make per year, though, decent cash and cash equivalents. They do have decent net margins, which they are protecting, but nothing fantastic. Coca-Cola has actually better net margins than Pepsi, but their most recent quarter, 12.57, that's not terrible, guys. Look at Pepsi's operating margins, right? So 2022 was the big crush, and now they're kind of back to standard gross margins, back to standard operating margins, slightly under the company's historical average in terms of operating. And net margins, although they're a little bit low, they are in relation similar to the company's historical averages. So I wouldn't say there's a problem there. In terms of the company's growth, as you can see, EPS growth for the next 4 years and revenue growth, although small and not that meaningful, right? It is still a growing business. So the valuation, I would say that Pepsi for me right now is kind of just a hold, right? I would like it down here in the lower 160 level. I played it a lot between the 165 and 160 level. Down there, I really like it. Right here at 172, you got to be picky with Pepsi, guys, because we know they have a lot of headwinds in front of the company. I'm not looking to chase this one higher. If it comes down to me, perfect. I'll play it with some short put opportunities close to the 200-week moving average, which is this green line right here that you can see every time we touch it. Usually a good buying proposition for Pepsi. But as of right now at 172, I'll be honest with you guys, even though I really like the company, it's not the best deal out there, even though it's super solid and I wouldn't be nervous having it. At best, it kind of remains a hold for me. Not a screaming deal as of the current time right now. So that's pretty much everything for our Pepsi earnings. Hopefully you appreciated that. Give me a quick second. And now let's get into our technical analysis with our SPY smashing through the all-time highs. So let's erase this bearish catalyst list right here. and move into the technicals. So technicals looking really good, guys, right? Even if it looks a little bit choppy here on the SPY chart, take a look at the futures, right? This is very smooth. As we were saying, beautiful daily uptrend, daily higher lows were set. Where did we backtest, guys? 5 times. They set the daily higher lows, backtesting prior all-time high resistance, backtest, 12 EMA touch, and then now run. So beautiful daily uptrend expansion. And I was telling you guys that we need to have a bullish lean for this bull flag right here. Why? Because the bulls control everything until proven otherwise. They control the monthly uptrend, they control the weekly uptrend in a decisive fashion. So your bias needs to be for a bullish break to the upside. Hopefully that makes sense, right? So daily uptrend is nicely confirmed. At this point in time, we'll go back to the SPY. Any pullback at the current time, looking for a daily higher low, anything above 565, looking for that daily higher low for possible trend continuation. Now, the rollover scenario. If we roll these markets over, guys, is it that big of a deal as of yet? Not so much, right? We know the bulls are in full control of the weekly. It would take a heck of a weekly move down to challenge this weekly uptrend, right? So as of right now, even if we get the daily trend rollover, right, we'd just be looking for a weekly higher low, anything above 538, weekly higher low for possible further trend continuation. Hopefully that makes sense. Moving into QQQ right now, QQQ also looking largely the same. If you think it looks a little bit choppy, we can always use the futures chart and you'll see it's a lot more smooth. So daily uptrend is well in motion right now. Daily higher lows are set and now looking for the trend expansion. Contrary to the S&P 500, the QQQs have not smashed the most recent highs, so they do not have the confirmation that this leg is the next leg of daily uptrend. We can obviously get rejected at the equal highs, and if we break the lows, that would be a daily downtrend. So we're on the watch for the break on the session of tomorrow, but it's looking quite good for bullish momentum continuation. That being said, in the event we do pull back, guys, need to protect these lows right here. 478, right? Anything below would just be looking for daily higher low for possible further trend expansion. So that's the way I see it. And in the event we get the absolute flush rollover, because the markets just take a big dip here into seasonality and into the bear case scenarios, well, you obviously know who's still in control of the longer term timeframes, right? We're going to be expecting a weekly higher low, anything above 448, weekly higher low for possible further trend continuation. So as of right now, guys, even the longer form dips are for buying. Where you start to get really nervous for the markets, guys, is when we lose the weekly uptrend as a whole. That would be synonymous with further monthly consolidation. That's when you're expecting a larger drop. So until I see a meaningful pullback by the bears, lower high and going for it, I'm not too nervous about these markets here, guys. But the way I'm playing it is I'm being extremely selective with the companies that I'm choosing to make some swing trades on. The long-term portfolio stays the long-term portfolio. I'm not touching it. I'm not hedging it, nothing. It just stays as it is. I DCA into the portfolio every single month and it just sits there regardless of what happens, right? If the market falls apart, S&P down 20%, QQ down 30%, perfect. I'll DCA even more into the long-term portfolio, no problem at all. But for the swing trades, the weekly swing trades or the ones sometimes that take 2-3 weeks to play out, I am being extremely picky with the companies that I choose to do it on right now, because we have a lot of headwind risks ahead of us, guys. So please only play high quality either companies or very high quality technical chart setups. You'll find it to be a lot easier in these market conditions. And that's what myself and all of our Discord members have been excelling at doing in the most recent couple of weeks, that the markets have been kind of sideways flat and kind of torn between these narratives, right? Moving into financials right now. Financials not looking bad at all. We know we're in the context of this massive tightening range. You see it best on the weekly, right? Big tightening range. Financials, though, got to keep an eye on it because we don't have that much time, guys, before the Friday earnings season, right? So Friday, we have JP Morgan, we have Wells Fargo, we have BlackRock. Then on the next Tuesday session, we have Goldman Sachs, Citi, Charles Schwab, Bank of America. Tons of them coming in next week and on the Friday session. So tough to be able to say which way that's going to impact our price action. Those are obviously going to be the main determining factors for our XLF financials ETF right now. But as we look right now, guys, we are now chilling at the all-time highs. As you can see, a couple different touches, and we have still not broken through these all-time highs, but it's not looking too bad. The bulls do control a temporary daily uptrend right now. So even if we get rejected, what you don't want to see is a loss of these lows, 44.74. That would kind of undo the momentum, send us into a daily downtrend, and just extend this weekly consolidation a bit further here, guys. And then we just be looking for a weekly higher low, anything above 43.50. Just probably looking for a weekly higher low and maybe just tighten up this range a little bit more, right? But as of right now, if there were no earnings or nothing like that, the price action is looking beautiful, guys, right? For continuation, bulls control this weekly time frame. This is an ascending wedge. Usually these do break in a bullish fashion, but then again, we have earnings coming up, guys. If earnings are super ill received by the market, so they're not well received at all, well, don't expect the breakout of the all-time highs. But just pure technicals, if I just put my technical analysis goggles on and forget earnings, forget everything that's happening, this chart really looks good, right? So it's kind of a conflicting scenario. We want to play this one for the breakout, but then again, we have a huge catalyst in the way over the next few days of trading, right? So we'll keep our eyes peeled, but one thing's for sure, it's going to take a lot for these the bulls to lose complete control of these short-term charts. As a matter of fact, they need to lose 43.50. Moving on to XLV. So XLV, finally, a very beautiful day of bounce on the XLV, and that's what we were kind of looking at, right? Daily downtrend was clear as day. Gorgeous daily downtrend by the bears. Came into our big area of support, which was our prior all-time highs back here, well, before we got these ones, right? And reacting nicely from the support, and now we have our bounce underway. So I was telling you guys, watch for the change in the hourly trend. We got it today, and we got the follow through, right? So beautiful hourly uptrend. So the whole time we're in an hourly uptrend, you know that the daily move higher is continuing. And at this point, I like the size of this bounce, guys. You guys know the drill, right? When you're looking to reverse this daily downtrend into a daily uptrend, you need to have one of two things happen. Either a 100% engulfing move, and then you have a lot of space to reset the higher lows and higher highs into the new daily uptrend. Or the more likely scenario that we see more often is give me a bounce size at least to the 618 on the fibs or the 782, which is a 61 or a 78% retracement. If the bulls can create all this space, it stands to argue they have a lot of space between us and our lows to be able to reset this higher low into a new daily uptrend. So as of now, I like the bounce size, a lot of space created. The odds now favor the bulls for a daily uptrend recapture. And this one, guys, has been kind of left behind, right? What's been running the last couple of weeks? Well, financials has maintained the same, but it's been the QQQs. QQQs has stolen healthcare's position as the first mover in terms of the rally. So in the event we see a QQQ pullback, that opens up the door for the XLV to kind of catch up and help support the SPY. So it's all about rotation in these markets, but as of now, looking quite good for the recovery of the XLV trade. Moving on to semiconductors. Semiconductors, another great day without NVIDIA, right? The last 2 days was all about NVIDIA, but today they did it without their star player, right? So still looking very good. Daily uptrend is underway, but still equal highs. We are still in the context of this overhead resistance, which ends at the 257, this whole red box right there. Crack this, and we have that new daily uptrend confirmation leg underway, and we'll be looking for one of my favorite trades, the good old breakout retest of a big area of resistance, testing it as support and run. I would love to find this retest trade if we can get it. In the event that we fail, guys, we'll just be looking any move lower, looking for a daily higher low, anything above 237, looking for a daily higher low for a possible second attempt at this. But the bulls, not looking too bad, no short-term red flags. The weekly, if we close the weekly like this, guys, we're going to officially be in a new weekly uptrend for SMH. And if that's the case, even if we lose this daily and set the daily downtrend, you guys know what's up, right? Just looking for a weekly higher low for further trend continuation on the weekly. And on the weekly, at least we have a ton of support below us, 237 down to 225. This big green box of support to be exact. And look at your MACD on the weekly, guys, right? Could be an indication that even if we get a little bit of a pullback, the momentum is now going from bearish slowly to bullish. So we'll have a lot of semiconductor earnings over the next 2 weeks as well. Moving into IWM Russell right now, only up about 0.22%. The Russell really getting caught in this fight of narratives. Is it a risk on environment? Is it a risk off environment? That is why the Russell cannot run. It needs the green light. It needs perfect economic data, more jobs data that's not going away, Federal Reserve on point, cutting on interest rates, no crazy disappointments in corporate earnings. It needs like the green light scenario, guys. No major red flags. That's the only time, in my opinion, that people are going to get the actual Russell rally that everybody really wants, right? Blasting past the all-time highs and catching the rest of the trade right here. In my opinion, though, it's going to be very tough for that trade to manifest because of all the uncertainty right now. That being said, the bulls not looking too bad. Still in the context of the daily downtrend right now. Lower high is set. We'll see if they can protect this location. If they fail 215 and drop below 215, daily downtrend simply continues at that point, and we'll just be looking for the furtherance of weekly consolidation. Anything pretty much above 204 should be quite healthy. If anything, we're just looking for kind of a tightening range of accumulation, guys, above this area right here, 210 down to 208, which was the previous big zone of congestion. So I'll keep my eyes peeled on the Russell, but myself personally, I wouldn't really be too interested in this trade unless I can scoop it up down here in these lower locations. And now lastly, the Dow Jones. Dow Jones, not quite a new all-time high, but look at this beautiful move on the Dow Jones, guys, looking like it wants to catch its brother or sister, you know, the S&P 500. So daily uptrend was nice. Sideways, big consolidation. I was saying, guys, this is a bull flag for all intents and purposes. And you only need to look at the weekly time frame to realize that, right? Consolidating near the highs, sideways usually results in a bullish leaning bias, especially if you are still in the context of this gorgeous weekly uptrend. So we'll keep an eye out for the all-time high break. One thing's for sure, if we do pull back, guys, looking for a higher low, anything above this guy right here, 41,850-ish, just gonna be looking for the daily higher low for further trend continuation. If we lose this big level without breaking the all-time high, yes, you guessed it, that would be a daily downtrend. And then we'd just be looking for further weekly consolidation. Anything above this guy right here, 40,000, just looking for the weekly higher low for further continuation. Target the area of confluence for the pullback, roughly around 41,000 with the confluence of the AMA of the 12 EMA. That's pretty much everything for our major sectors, guys. Hopefully you appreciated that. We covered all of everything else in yesterday's video, so I'll do these once every 2 days. Bitcoin as well. Even though Bitcoin's losing a couple levels right now, we will revisit it tomorrow. Not that big of a deal, looking still for the weekly higher lows, right? We'll do more analysis on Bitcoin tomorrow, and I'll update you guys with my trades. But now we're going to go through our big tech names really quick. So Apple up about 1.67%. Decent performance by Apple, but still, guys, we are trapped, right? 127 to 123. This whole range right here, guys, Apple has just been consistently trapped in it. And even though the daily might look messy right now, you can really see that best on the weekly, right? So if I remove these two lines, clean up the chart a little bit, you guys can see what's clearly happening right there, right? So we have the highs that are not being broken. This is now the third or fourth attempt that Apple's trying to break them, but it's doing that with this very, very nice period of tight accumulation. This, guys, in other words, is the same thing we were looking at prior, right? It is an ascending wedge. And usually when you have a ascending wedge, or rather ascending wedge would be like this, that's actually bearish, a bullish triangle formation. If you guys want to be technically perfect, I'm pretty sure everybody knows what I was talking about. It looks quite good. The bias is somewhat bullish on this one too, because we're in the context of a very glorious monthly upswing right now, right? So Apple not looking too bad at all, admittedly, but still not yet consolidating with the break, or we're not yet confirming the breakout pattern as of right yet, right? So not looking too bad. Daily uptrend is very, very, very messy right now. I would not say the bulls control anything. Still have not set the official higher lows for daily uptrend. This was a daily downtrend. We've now engulfed it. Now they need to reset. So we'll see what happens if we get continuously rejected up here. One thing's for sure, the largest area of support is below us. 219 down to about 214, guys, is that big area. So maybe we just tighten up a little bit more. And then we have earnings, of course, on Monday, the 28th of October. So right now, Apple, I'll give the benefit of the doubt to the bulls. It is not looking too bad at all. If anything, this does point technically on a technical pattern basis to a bullish follow through to the all-time highs. Next area after that is going to be, of course, 237. Myself personally, guys, I'm not really playing Apple. I don't think there's decent risk to reward up here. And also I've said many, many times on the channel so far that your valuation for Apple right now is very, very high. So long-term shares, I'm keeping mine. I'm holding, not adding anything new up here, and also not embarking on any new swing trades for blasting off the all-time highs. I think there's better opportunities in the rest of big tech in terms of risk reward, and we're going to get into a few of those right now. Moving into AMD. So AMD down about 1% today. So not looking too bad in the grand scheme of things, guys. AMD has tons of room for the bulls. Beautiful daily uptrend in motion right now. Any further pullbacks going to be looking for the daily higher low. Anything above 159, looking for the daily higher low for possible further trend continuation. And in the event we roll over, set the daily downtrend, well, we're going to be opening up one of my favorite trades of all time, guys. You should know it by now, which is the infamous weekly uptrend, breakout of a huge level of congestion, this resistance, right? A breakout, retest, and possibly run. You could argue that they already retested it, but I'm talking about some weekly consolidation here, right? 1-2 weeks of red, giving back 162 to 155, and I'm going to go for it for that trend continuation, guys. Why? Well, very simply, we have the weekly MACD crossing back over. That has not been the case since March, guys. It's been bearish momentum overall since March. Now we finally have the weekly MACD cross. And second, and most importantly, of course, is the fact that their data center ramp revenue is coming online now, this quarter, next quarter, and all through 2025. Look at this EPS expansion, Q3, Q4. This is when the EPS really starts ramping, guys. So take notice of that. And even quarterly revenue, look, relatively flat for the past 2 years. Boom, Q3, Q4, that's when it's going to start to ramp. And look, 25, 26, 27 is the ramp. So if we can get some pullback, confluence with that Q3 ramp, I think we have a recipe here for a little bit of a runner, at least over the next 3, 4, 5, 6 months, right? Thinking longer duration, not so much like 1, 2 weeks of like boom, like Palantir, right? Moving on to Amazon right now. So Amazon 1.34% to the upside. Gorgeous, gorgeous stock right now, guys. I was kind of hinting at it on the channel, right? That this was a decent little buying opportunity, and it was. So looking quite good on Amazon right now. So we know the drill. Amazon wasn't a daily downtrend. We know that Amazon was also in weekly consolidation, which is why I was saying it was a good opportunity, because we were just looking for the weekly higher low for further trend continuation, and the 180 to 178, even though the two lines stop right here, it has been an area of congestion in the past 2024 as a whole. So I like that level, quite solid level, and now we're looking for the bulls to put in somewhat of an engulfing move, right? Give me a break of 187, you'll have a daily engulfing move, create enough space that even if we get rejected here at the resistance line above us, right? If we get rejected right there, we still have a lot of space to set up for the daily higher low, daily trend change. And when you get the official daily trend change, you know the weekly higher lows are set, and we are possibly due for another weekly leg of rally higher into the Jeff Bezos wall of $200. Because every time we get up to $200 or close, Jeff Bezos drops a $5 billion share sale on us, which is why I call it the Jeff Bezos wall. One day we will get through this one, guys. Trust me, we will make it through Jeff Bezos's wall. Moving into Google. So Google moving down about 1.6%. Not too bad on the day, even despite their headlines, right? The reason I say it's not too bad is because these headlines, guys, they're going to start hitting less and less and less, right? This reminds me eerily of Apple, right? I brought this up with our Discord members today. It reminds me exactly of what I was saying about Apple. You guys may remember on the channel back in April, right? Apple was getting hit with everything. You guys might remember this list right here, right? $2 billion EU lawsuit, Department of Justice lawsuit, 5 out of 6 quarters flat revenue growth, China slowdown, competition from Huawei, Vision Pro's too expensive, lack of phone innovation, Warren Buffett is selling everything, AI is underwhelming. You guys remember that? You should remember that, right? And then that was the location where, in a cheeky fashion prior to earnings, that's when I bought calls, because I was saying, well, they've already hit us with everything, right? We already got all the negative news headlines. Stock's been dropping for 3 months. Probably a decent time for a buying opportunity in the 170s when the PEG ratio was good, the valuation was good, right? And we went for it, and the rest is history. What else got hit by the Department of Justice lawsuit headlines? Well, I'll give you another good stock that we smashed on the channel, right? Visa, culmination of issues down here, right? Department of Justice lawsuits, everything in the kitchen sink hitting the stock at the same time, 3 months of consolidation, and the rest is history. We absolutely crushed this one. So now I bring to you the chart of Google, right? I won't do any analysis on this one. This is the monthly chart. You can see the amount of months that we've been down so far, right? You can see the valuation too as well. 114 PEG, extremely cheap. You can see the revenue growth. Let me pull up also the analyst forecast for the stock. As you can see right here, we have, let's call it 65 analysts on the stock. Nobody's selling. Here are your price targets. Here's the current price. Here's your EPS expansion curve. Here's your revenue expansion curve, right? So all that to say, even though I haven't really said anything, I guess you guys can kind of make the case on your own, right? We've covered this a few times in the past. So this one is looking eerily similar, even though we're not next to our lows. These lows, by the way, are where I hit my first leap call option that we're now up 40% on. I'm just going to throw that out there because you guys know I love this area, right? So even if we fall all the way back down here, 150 to 145, deep value for Google. Their business is not going anywhere. Yes, it's true. They have monopolies in their search business. You can argue they have it in advertising too, but what is the recourse, guys? That's the key thing, right? I don't believe the Department of Justice is going to break up the company as a whole. I think all of this is just FUD, right? So moving on to the actual technicals for today. Technicals, yes, you can argue that Google now has officially lost the daily uptrend into daily downtrend territory. The next big area, guys, is going to be this 200-day EMA right down here, 159.77. So what are we looking for on Google? Well, we know weekly downtrend. We had a big daily and weekly engulfing move as well, 100% engulfer right here. Now what we're looking to do, guys, looking to set up for the weekly higher low for possible further trend continuation. This line right here is the 50 EMA for Google, and you can usually see in the context of an overall bull market, this is interest rate hike, supply chains are broken, and the entire market is falling off a cliff. But in the normal context of market movement, usually when Google falls down to the 50 weekly EMA, good proposition. Keep an eye on this number, 157, right? Well, the 200 EMA is close to there as well. That's on the daily, 159. So big confluence there. And if ever we fall all the way back down here, guys, 152, 145, I will be buying the heck out of Google stock, still hunting for our monthly higher lows for further trend continuation. You cannot say that the monthly lows are set until you get a confirmed weekly uptrend back, right? So even if we fall all the way back down here, it might look dire, but we'd still be looking for a monthly higher low, anything above 130. We'll do it for the monthly higher low for further trend continuation. So I love Google, one of my favorite stocks in the market right now. Moving on to Meta right now. So Meta down about 0.4%, not looking too bad at all. They have space to move, right? So daily uptrend is clear as day right now. Beautiful, beautiful move higher. So now at this point, guys, 600 psychological remains your resistance. If we pull back a little bit further, tons of space for Meta bulls, anything above 555 daily higher low for possible further trend continuation. And in the event that we roll this over, lose the daily higher lows, set up for the daily downtrend, lower high, lower low. You guys know the drill, zoom out. So we're just going to be looking for a weekly higher low for further trend continuation. And if we pull back, guys, trust me, if we pull back 545 to 530, I will be absolutely smashing the heck out of this trade too, because at that point, it'll be one of my favorite trades, the breakout, retest, and run trade. And Meta, even though Meta's at the all-time highs right now, the valuation, I literally just did these at $600 for our Discord members today. At $600, the PEG ratio is a 1.4 and the free cash flow yield is still roughly about 4%. Absolutely amazing company. Many good things to come for Meta still in the future. So I will be a dip buyer even if we are at the all-time highs. Great company. I love it. Moving on to Microsoft. Give me another brief second. Microsoft up about 0.66%. Not too bad of a day for Microsoft today. So Microsoft also kind of looking to reestablish its weekly uptrend dominance right here. Still hunting for that weekly higher low for the perpetual or for the eventual rather daily trend continuation, right? So our weekly uptrend continuation. Let's look at the daily. So daily, definitely in a daily downtrend as of currently. Everybody can see that clear as day, right? So daily downtrend looking for the size of the bounce. As of now, the size of the bounce on Microsoft is still quite small. It's only been 2 days, only about a 38.2 bounce. So if the bears regain control of this move right here, meaning if we lose this hourly uptrend into tomorrow and they set up for the hourly downtrend, you can be almost guaranteed that we're going to revisit these lows and possibly even smash them. Now, however, if we continue to the upside, 50% retracement, 618 all the way up into the 426 area, that would be best case scenario. The bulls would create a ton of space off the lows, set themselves up nicely for the higher lows and possibly the daily uptrend shift and start attacking the higher resistance range, 425 up to about 435, which is that big area of congestion here on the weekly that's been plaguing this stock a lot throughout the year so far. I do maintain though that even at these current levels, guys, Microsoft, a very attractive opportunity. But if we somehow come down here, 400 down to about 390, guys, this is where I start loading up the leap call options. I would love to see Microsoft down there. Maybe have to wait until their earnings for that to happen. That comes in Tuesday, the 22nd of October. So I am in Microsoft right now. I love the stock, but if it comes down here, that's when we really go, heavier with some call options, leap call options, 1.5 year type of thing, 80 deltas. Now moving into Netflix. So Netflix up about 0.79%. Super bullish chart, right? Daily uptrend right now is continuously underway, and they just set the new daily uptrend leg right now. So at this point, guys, new all-time highs for Netflix. Any single pullback, just gonna be looking for a daily higher low. Anything at this point above 696, daily higher low for further trend continuation. The weekly looking very good as well. Beautiful weekly trend continuation, back tested this area of support a few times before running, and below us, just even if we lose this daily right now, guys, right? It could lose the daily and still have a lot of space, anything above 664, looking for that weekly higher low for further trend continuation and all this range of support in the mix. So that talking about 700 down to about 675. But keep in mind, Netflix is with earnings next Thursday. So not that many days of price action remaining for Netflix, but I'd like to see them create as much space as possible between now and earnings. Why? Because if ever earnings are not well received, well, at least they'll create some decent cushion, guys. Usually Netflix moves 6-7%. So if they can come up to roughly the 740, 750 area, that will give them a lot of cushion that if they do fall, at least they'll fall directly into our support zone down there. Moving on to NVIDIA right now. NVIDIA down about 0.18%, but not the biggest day for NVIDIA at all, right? They did push a new high today, 135, before retracing a little bit. So just goes to show NVIDIA bulls are in full control right now. Daily uptrend is well underway. And at this point, even a slight retracement, guys, we're just looking for anything above 115. Any pullback, just looking for a daily higher low for further trend continuation. Now, I put a line here at the 135, but in all reality, guys, it's more like a range, right? So if you want to draw somewhat of a range, it's kind of all these candles right here, right? All these candles. You can even extend it back a little bit. You'll see we get a couple more candles worth of price action. You can see that it's a congested area for the most part, right? So if you get a pullback, I would not be surprised if the bulls use this whole 130 down to roughly 126 area as some form of a base of support and possibly get that daily leg higher. Obviously, if we come back and pull back way too much, you open the door to then roll over, lower high, lower low, and then we just be looking for a weekly higher low, guys. At this point, NVIDIA has created a lot of space, so congratulations to the bulls. Any further pullback on the weekly, guys, looking for a higher low, anything above 101, 102, let's call it, weekly higher low for possible further trend continuation. I myself like this one a bit better, between 120 and 105. That's where I like to play this one a little bit more aggressively, not trying to chase it at the all-time highs right now. This one, similar to other companies in this list, guys, it's just a hold for me. I'm not adding any NVIDIA up here. I'm not selling any NVIDIA up here. I'm just holding what I have, right? Moving on to Tesla. Tesla, big day event tomorrow, guys. Robo-taxi event. Now, I wouldn't be surprised as well if the robo-taxi event is quite well received by investors. Quick little tidbit, right? Tesla is not unveiling a functioning robo-taxi tomorrow. They're just delivering what the prototype is going to look like and also how it can be impactful in people's everyday lives, how it might be replicable for Model 3 sedans or for people that want to rent out their car, so to speak, put their car to work on the network. But this is still years and years and years away, right? But tomorrow we get the blueprint, which is what everybody's looking for. So I do believe that the event should be well received by the Tesla community and by investors alike. But how it's going to move the price action, guys, is anybody's guess, right? Sometimes these events, sometimes you can argue that a lot of the bullishness was kind of baked into the event prior to it coming out and it becomes a sell the news event. Or tomorrow, Elon Musk could show us some things that nobody was expecting, and those new things, the new flashy things that nobody was expecting, that could possibly make the stock move higher, right? So for the price action for tomorrow, guys, really anybody's guess, right? I'd be lying to you guys if I told you that I knew where this one was going, and I don't think anybody truly knows where this one is going. At best, you can have an educated guess, but take a look. The expected move for tomorrow, or for Friday rather, is 6%. Kind of like an earnings release for Tesla, right? So it's going to move either way, right? 6% to the upside would be once again starting to challenge the 265 area of very, very large resistance that's been plaguing us in the past. And, 6% to the downside is going to put us right in that big support zone that I've been talking about. So if you end the day red, daily downtrend is underway, and you're just looking for a weekly higher low, anything above 203, just going to be looking for that weekly higher low. If we get the 6% blast off, well, suffice to say, the daily downtrend concerns are kind of over. You get that renewed daily uptrend push. Your weekly higher lows are set. And then you start challenging the 265 area. So we'll take this one day at a time here, guys. In my opinion, the best way to possibly play this for Tesla for tomorrow is just not go too heavy at all, right? If you want to make some short-term plays, it's going to be very, very tough because the implied volatility, especially with the VIX at 20 right now, the call options are going to be juiced, right? The put options are going to be juiced as well, in my humble opinion. So possibly one of the best things, well, this is not a recommendation. The best way that I could possibly see playing it would be maybe some call debit spreads. Call debit spreads are great at kind of mitigating the implied volatility and also mitigating theta crush. So call debit spreads perhaps with like 45 days, 60 days of times, with some strikes up here, 260, 265, could be an option. If you have a bearish lean, well, let's just put debit spreads the other direction, or possibly selling options as well. There's going to be some very good volatility. If you can find some decent premium, if let's say Tesla drops tomorrow during the event, you know, a big red candle, it might open up some short put opportunities down here, maybe in like the 210 location. So I'll be keeping an eye on it, but I don't say I'm going to be positioning myself before the event. So we'll keep an eye on how it goes tomorrow. Best of luck to everybody in Tesla, myself included, because I'm a long-term Tesla shareholder as well, right? So I have, you know, money in the mix as well on this one. So I hope for the best, right? As they always say, hope for the best, but expect the worst type of thing, right? And you can't be disappointed. Moving on to Palantir, their absolute rocket ship. Palantir continues, right? Palantir 4.05% to the upside, looking very good. Like I was saying yesterday, the bulls are just having fun with it at this point, right? Daily, slight overbought conditions, but the bulls don't care currently. Weekly RSI, 78 currently. So right now, Palantir for me is not a chase. If you are in, perfect. But for me right now, chasing this one, having FOMO, definitely not the best recipe for success, in my humble opinion, guys. Palantir has run an absolute ton, and buying up here just doesn't have proportional risk to reward. Always manage the risk first, guys. And as I've been saying on Palantir, Palantir always does have, well, not always, but goes through these cycles. 5-6 weeks of upside, huge rallies, and then pulls back for a couple weeks. Huge rallies, pulls back for a couple of weeks. Huge rallies, pull back, huge rallies, pull back, huge rallies, pull back. You guys get the mix, the gist of what I'm trying to say, right? So as of right now, we're extended everywhere. We're extended on the RSIs. We're way far off the 12 EMA, arguably as far as we've been from the 12 EMA since the peaks here, or maybe since the peaks here, but we're even further than that from the 12 EMA. Usually Palantir doesn't get that extended, you know, and when it does, it tends to pull back a little bit. So just be mindful that a pullback could be coming soon. The best way that I'm playing this is by writing covered calls. The VIX is high. The volatility on Palantir right now is high. It is the perfect opportunity, in my opinion, if you're happy with your gains and you want to protect those gains. Well, not financial advice, but I wrote covered calls of my own Palantir position just to give you guys a general idea of things. But as of right now, guys, the bulls are in absolute full control right now. Daily uptrend, beautiful, clear as day. So any pullback, just going to be looking for a daily higher low, anything pretty much above 38.81. Into our support pocket, into the 12 EMA, just going to be looking for a daily higher low for possible further trend continuation. And in the event that this is the top and we start rolling over from here, daily downtrend, is it that big of a deal? No, look at all this space. Anything on the weekly, guys, anything above 29, just looking for a weekly higher low for possible further trend continuation. So that's the pullback that I'm kind of waiting for here, guys. I don't know how big it's going to be. Obviously now, you know, it'd have to be a pretty big pullback, you know, 15-16% worth of a pullback, but Palantir can do it. That's no stranger to Palantir, right? Look at these. These are all like, you know, 12-15% pullbacks in the context of things, right? So I'll be looking for a larger form pullback. I want to see the weekly higher lows, guys. I'll be waiting for the weekly higher lows to establish a new level, and I'll be making some new trades there, probably with some short puts. I have nothing against the company. I'm with you guys. I've been riding Palantir since all the way down here, guys. My average cost is like $11.50 like that, but I'm holding right now. I'm not buying more. I'm not selling up here. I'm writing covered calls against my position because I'm very happy with the gains, looking to protect these gains in the event the markets fall off. Remember the bear case scenario for the markets, right? And Palantir is not immune to an overall market sell-off. So just keep all of these things in mind. In my humble opinion, well, for what I'm doing, because I can't tell you guys what to do, I'm not FOMOing at the top right now. So take from that what you will. That's pretty much everything, guys, that we had for our daily market recap. Hopefully you appreciated that. If you did, guys, consider dropping a like. Would really appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these videos every Monday through Friday after the close. Hopefully see you back in one of them shortly. And lastly, guys, if you have any questions at all, always feel free to leave them down below in the comment section. I usually answer all the comments within the first 24 hours. So anything you want, if you want me to look at a stock during one of these videos upcoming soon, I'll have a look at the stock for you. Technical analysis, of course. If you want a second opinion on an options play, just feel free to leave it down below. Or general macro discussion about the bear case scenario, always feel free, guys, to engage down below in the comment section. Other than that, I'll see you guys tomorrow after the close. Take care and peace.